For the people who work numbers, I am giving you free advice that those of you who are holding dollars, you surely might go into losses. You better do what you must do, because this market is going to be different in a couple of weeks.
Hey everybody, it's Eri from Tokyo. This is your cryptocurrency update from Japan, and what you heard was Kenya's President Ruto explaining that the dollar demand in his country will ease in just a couple of weeks because Saudi Arabia and the United Arab Emirates, they've made an import deal where the fuel companies will pay using the Kenyan shilling, not the US dollar. This is a shift, a move away from using the dollar. And it's just not here. We see it happening in other countries as well. Have a listen.
Vladimir Putin announced this week that Russia will begin using the Chinese yuan for international payments instead of the dollar. Saudi Arabia is also in talks with Beijing to do the same thing. Speaking of Saudi Arabia, meanwhile, they're in talks with Iran as well to consider an economic alliance with China and Russia. And they can even be joining the BRIC countries, which is an acronym for these countries here: Brazil, Russia, India, China, and South Africa. These countries all have emerging economies. What happens if these emerging economies move away from the US dollar towards the Chinese yuan?
It's really hard to overstate exactly how catastrophic the abandonment of the U.S. dollar would be as the world's global reserve currency. Look, since the end of World War II, the dollar has been the safe place to go, and it's been backed up by a couple of things. It originally was backed up by gold, but President Nixon took us off the gold standard, so there's no hard asset backing up the dollar anymore for the last 50 years. But also it's been backed up by the strength and economic power of the United States and the fact that oil has always been traded in dollars. If that were to end, that would mean the end of the U.S. dollar. And all it would take at this point now, because we're at this pivotal moment, Will, is for Saudi Arabia, who has indicated that they're open to this, to say, you know what, we're going to be open to considering other currencies to trade in oil. If that were to happen, there would be a complete implosion of the global economic system, but certainly the American economic system. And if that were to happen, you'd be looking at sky-high inflation, just raging Weimar Republic kind of inflation. If you think inflation is bad now, just wait. But more importantly, we would lose our economic dominance and we would lose our superpower status. Oil is the critical linchpin of this. If Saudi Arabia decides to join with America's enemies here and start trading oil in different currencies, that is going to undermine the entire global economic system. And here at home, you know what it's going to mean for us? It's going to mean raging inflation, so much worse than anything we have ever experienced, Will.
I want to ask you specifically about inflation. Are we looking at a prolonged decline in the markets because of inflation? Is inflation on the rise, and should we be concerned about it?
Well, let me take that in the reverse order. Inflation is a very serious subject. You can argue it's the way democracies die. When democracy dies in Latin America, inflation is a big part of it. So it's a huge danger once you've got a populace that learns it can vote itself money. If you overdo it too much, you ruin your civilization a lot. And so, of course, it's a big, long-range danger. If you look at the Roman Republic, and even after they went to an empire with an absolute ruler, they inflated the currency steadily for hundreds of years, and eventually the whole damn Roman Empire collapsed. So it's the biggest long-range danger we have, probably, apart from nuclear war. Well, I think the safe assumption for an investor is that over the next 100 years, the currency is going to zero.
The last clip was Berkshire Hathaway's Charlie Munger. I don't always agree with him, especially when it comes to Bitcoin, but what he said in February should be taken seriously. And look at this reality check. The streets of Venezuela are littered with fiat because it's become so worthless. Earlier today, CZ of Binance said it's mathematically impossible to print trillions without inflation. Elon Musk replied, "True." Let's shift to something positive. You can see that XRP is trending. This is Lunar Crush. Yes, 48 cents, up 6.31%, and in that #1 spot. I'm going to be keeping close tabs on Twitter because, as many people expect, we're going to have a decision come in the SEC versus Ripple case this week. And that price action just might be the anticipation of it coming. Kyodo News in Japan reported that the G7, which is going to take place in Hiroshima this May, will promote tougher regulations of the crypto sector. It's intended to accelerate the pace. This will include Britain, Canada, France, Germany, Italy, and the US, as well as the European Union for that summit. Also in Japan, Shiba Inu got a new listing on Bitflyer. This is a country that loves its meme coins. It once drove the meme coin Mona, which is a cat, up to $15 back in 2017. I suspect it's going to be very successful here. Something XDC holders are looking forward to is the first ever conference to be held in Austin this summer, August 25th and 26th. Yeah, I'll see you there, and have a listen to this short clip.
Hey, this is Trey Nelson, founder and CEO of OnXDC. OnXDC is a central hub for all of the projects and companies building on and beside the XDC network.
Hey guys, Ronnie Mitchell, co-founder and president of OnXDC. I'm a longtime XDC community member, run a validator node, and I'm currently on the advisory board for Plugin, VoiDeFi, Prime Numbers, Ecosystem, and Crescite.
So OnXDC is a platform that's going to bring awareness of all the projects building on XDC, encourage growth, promote education, and ultimately mainstream adoption of the XDC network.
As an OG in the XDC space, I knew something was missing. When I saw Trey post on xdc.dev, I knew that this hub was something that we needed as a community. A one-stop shop to find everything built on XDC.
I want to be really clear about who OnXDC is for. It's for everyone. It's for layer 2 projects. It's for the retail XDC holders, NFT holders. It's for newbies who are trying to get up to speed. It's for OGs to keep tabs on what's going on. Also for those who are migrating to XDC from other blockchains.
Look, we have a lot of exciting things on our roadmap that are going to help the XDC network grow exponentially. Products that will be game-changing for our dev community.
We're going to push out content and have a content library.
We're going to have incubator and accelerator programs.
We're going to have a fiat on-ramp and off-ramp, and really excited to announce today is that we're going to host the first ever OnXDC conference in the fall of 2023.
Yeah, baby. Just imagine all the people that you've been on Twitter, Telegrams, we're all going to be located in one place. We're going to be able to chat with everybody, hear about these new programs, hear about the projects, interject with everybody, and just grow as an XDC community.
Details coming soon.
See you guys.
All right, everybody, we're jumping to the fluff. Yeah, I want to tell you about this company. It's called Section L. And, well, they're really getting popular. They are creating these apartment-style hotels located in some of the best neighborhoods for sightseeing in Tokyo, all coming with a fully equipped kitchen and in-site laundry. They're intended for long stays, and if you crunch out at today's exchange rate, they're running around $100 a night. Even some of them appointed with famous Danish furniture brands. The company was established in 2020 with majority of the team meeting each other in the United States at the Hotel School of Cornell University. I'll put a link to the website in the description below. You just never know, this might be the perfect solution for you if you come to Tokyo. All right, everybody, do take care. Sayonara for now. Bye-bye.